Hello everybody, welcome back to this trade recap of today. Today's Friday, 17th of October. It's after a trading session, I did other stuff, and let's get into this recap. So, going to the day, we're seeing that, again, London displaced, Asia was displacing down, and then London displays up. We touch again this purple box that was the new week opening up. We didn't fill the midpoint, which I preferred it would. But yeah, I think we took a previous day low. Yeah, we took this low, was very important, and we're reacting from it, okay? So we had really nice reaction after this during London. And yeah, going today, I was like, okay, can we continue this trend after taking this low, or we want to just retrace to go even more and fill the gap, or at least go to the midpoint. But yeah, going to again here New York, I was seeing this 15-minute gap, okay, and I said, okay, this kind of gives me the indication for today, because you can see here Asia kind of stayed in this box and this place down, and then also London was respecting the midpoint of this 15-minute bearish gap, okay? So we're respecting the midpoint. I was like, okay, if we want to go back to this gap, and we want to go up, or we're just gonna reverse again. So looking more in the 1 minute, you can see here crazy volatility. We were moving 100 points in 3 minutes, 50 points per candle. Today was really an exotic day. Volatility was off the chart. I don't think I participated in that many days that were like this. I think I remember a few. And so again, you have to trade with micros, okay? I posted on my story with this one was with one mini is 1.6k, because I had kind of a horrible feel. I had it like a little bit more up, a little bit like here. Yeah, a little bit like here. But again, with the PA accounts traded with one micro, okay? So don't trade when this like this, when you're moving so much. Yes, it can be good if you catch it, but again, you see how price here approached to our stop. If I was in a normal PA, that would have been a devastating stop, okay, with normal size, more than almost 60 points. That's a lot. That's like two losses in one, okay? So just be really careful and adjust your sizing according to the volatility, according to the conditions. Okay, so we go again. We have these highs here. We take them, and there was actually a nice short here. I was still opening my chart. I always watch the 4 hour. I watch the daily, the 4 hour, 1 hour, 15 minutes, 5 minutes, 1 minute. Okay, so I was looking at the 5 minute, 15 minute. I was putting this gap, and again here, what is this? This is the first presented of Monday. Okay, so first presented last a week. Okay, so they are really powerful. So we were bodies perfectly, almost here, perfectly respected this gap. They filled it again, took the high, okay, and then displaced immediately V-shape and inverse this first presented of today. So technically this one was a good entry, okay, as soon as the candle closed. This one here. The stop again is a bit weird because it's going to be like 60 points. I would have put it like here. But again, the stop was weird. And again, the TP would have been those equal lows. And so you wouldn't get the TP full, because price just decided to react from this 1 minute and this inverse here. That made sense because this is the first gap of this leg, so it's the most powerful. So just here, as you can see, bodies wicks to the damage, so we're filling the gap, but bodies are respecting the midpoint. So that's clear indication that we want to go up if we are leaving these equal lows to again almost get after. We will get them, unfortunately. We'll get them here again. You see 1, 2, 3 equal lows here, another low here, another low here. This is engineered liquidity that we will take after. So yes, going here, this was a trade that could have been taken, but again, it wouldn't. On a PA, still would have taken it at 50, 60 points, which is a lot. But again, I think in hindsight, I would have put in TP here And so it would have been a break even, would have been a brutal break even. No, I think I would have put in like the stop here. So it would have been like a very, very small win. But going on, it's very low. So yes, we displaced convincingly after this move. And I was like, okay, now this is too high. We touched this is the lower bound of the 4-hour gap. I was like, okay, I want to see a retracement, and I want to see if we can inverse the retracement if we want to keep going higher to go into, in this case here, PM low. That eventually we took after. See again, engineer liquidity. You don't take it, you go back, you take it again. Okay, so for a lot of people, it's not actually liquidity. There are not actually a lot of orders at those points. This is kind of a concept followed by ACT and all those people that say, oh, there are orders there. At all times, orders are mostly in the range, okay, in the middle of the range. So again, I say it because that's how I've been taught. But if you actually look into it, where's liquidity, how it works, it's not over these highs and lows. It's mostly in the range. But there are, of course, stops there and whatever. But yes, we touch OTE. OTE, I think of this big range. Okay, so you take your Fibonacci tool, and I was taking this one here, I think. Yeah, I think I'd taken the 4 hours, so from high all the way to the slow, we were reacting from OTE. So I was like, okay, I'm a little worried. We'll see what we do. You see also how perfectly we were respecting this yellow line, OTE, which is 0.62 of the Fibonacci. We're respecting it perfectly. So I was like, okay, I need a really, really convincing inverse in order to enter some longs. And yes, that happened exactly. We retraced to this order block, perfectly order block, okay? And then we pumped with 2 candles and we inverse this 1 minute gap, because a 2 minute and a 3 minute was forming, but again, this 1 minute was the higher. And yeah, enter a little after that. I think my fill was a bit higher. But yeah, you put your stop below this candle, which is crazy high. And price just wanted to come back and fill this gap, which I put. Okay, fill this 1 minute gap. Okay, again, fill it perfectly. And then boom, crazy candle up. And then we had 4 gigantic candles. And all the way here. Why did I put my TP here? Because this was an old first presented, I think, again, of Monday. No, yeah, I think on Monday. I don't remember. Maybe I said Monday before first presented. This is actually first presented on Monday. I think I said it before. It was not Monday, it was another day. But still, that's where my TP was. Tiger, another guy in Discord, put his TP here. But he eventually was like, price reacted from the midpoint of this first presented. You see, it's not making up. You see it perfectly respect to the midpoint. And then after that, we completely dumped and then recovered and took the high. But again, also sometimes, especially if it's 90 points, just take them at the nearest place where it makes sense. For me, in this case, was this first presented. And yeah, to me, it makes a lot of sense, because for me, first presented are very, 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 very powerful. You can go by yourself and check it out. Not that many people speak about them, which is fine. And then, yeah, that's it. That was today. Again, very, very volatile day. You need to be really, really careful. Approach these days being actually mega, 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 mega careful. If you don't feel like training this high volatility, just step out. Makes sense, totally makes sense, I get it. And then, yeah, that's it. So I hope that this trade recap was useful. And yeah, I'll probably see you next week. And yeah, that's it. How I conclude my videos always. Yeah, that's it. Thank you so much. Peace.